Hey, what's up, everyone? Welcome back to my world of stocks and welcome back to our stock market weekly update series where I round up the biggest news headlines for this past week and I deliver them to you in this video, including this week we have Elon Musk telling longtime Tesla bull Dan Ives to shut his mouth. Grok 4 AI is now released and it's reportedly being integrated into Tesla vehicles. We'll talk about that. NVIDIA became the first $4 trillion public company. And we have a whole lot more to discuss too. Monster Energy stock, Palantir, Uber, Trump tariffs, so many interesting things that we got to cover today. So if you enjoy these updates, make sure you smash that like button. Let's just go ahead and jump straight into it, my friends. Now, as always, we do start first with a quick recap on how the market performed this week, followed by the macro news and then the individual stock news. But yeah, this week the S&P 500 was practically flat, starting with actually a bit of a dip that later recovered to finish slightly in the green, which was still enough to help it really, break north of another record high. While the tech-heavy NASDAQ saw similar but slightly better performance and also finished right near an all-time high as well. In other words, really the market seems to continue riding that wave of big tech and AI stocks in particular, at least for the moment. Those I feel are really helping to offset some of the macro concerns out there in things like tariffs and interest rates. And that's really just kind of helping the market stay as elevated as it has been. Speaking of which, there wasn't really too much on the macro economy front this week, other than probably the most notable story being that Trump announced that he will not be delaying tariffs past the August 1st deadline if countries don't get a deal signed with America by then, which of course, they would need to make large concessions per his demands. And to this, Trump posted on his Truth Social account saying, quote, "As per letters sent to various countries yesterday, in addition to letters that will be sent today, tomorrow, and for the next short period of time, tariffs will start being paid on August 1st, 2025. There has been no change to this date, and there will be no change. In other words, all money will be due and payable starting August 1st. No extensions will be granted. Thank you for your attention to this matter." Now, personally, I don't think that this is really too surprising here, as Trump can, let's be honest, be pretty aggressive out there when it comes to trade policy, especially. But I will just note that there has been times in the past where, he comes out with a very firm stance on some of these things, only to later kind of dial it down a little if a country is willing to at least negotiate or speak directly to him, asking for more time. And especially, when anyone kind of compliments him or speaks nicely to him, he tends to be a little more favorable to those people or countries or that type of thing. Anyway, I wouldn't be surprised if we actually end up seeing some enforcement on certain countries and maybe a little bit of a lax approach to others. We'll have to see what happens here. But that would especially, I think, be the case if, the economy starts tanking, or he feels like maybe tariffs cause too big of a risk to the economy. I could see maybe a little bit of a delay, maybe with certain countries. I don't know. It's always kind of up in the air when it comes to these things. So we'll just have to wait and see how that happens. Of course, I'll keep you updated on all of it. Speaking about tariffs, though, well, let's just go ahead and jump straight into the individual stock news portion now, because a couple of stocks actually had to do with all the tariff chaos going on in terms of their news for this past week. Notably Amazon, who saw reportedly sales during the first day of their Prime Day event. They crashed by a whopping 41% over the previous year, which many are kind of pointing to tariffs being a culprit for this, driving up prices and just leaving consumers with not enough of a discount here to really attract them and get them onto the website and buying more stuff. However, I will just tell you guys right now that, while tariffs are likely playing some role in this, and especially kind of on the fear side of things, getting consumers to maybe be a little more cautious with their spending, I actually think there's really two bigger reasons or kind of trends that I've really been seeing lately that I think are having probably a bigger impact. Number one is just really the mind-blowing debt that consumers are carrying right now, especially with credit cards, which I'll be honest, I'm guilty of too, and I've had my issues with credit cards in the past as well. But hey, if you speak to almost anyone out there, you'll actually find that a lot of people right now are really drowning in credit card debt, which is only really made worse, of course, by our high interest rates. And in my opinion, this is much more of a result of, I would say, really all the inflation that we saw post pandemic. Whereas tariffs, I think, are going to be having a little bit more of a delayed impact that we haven't even seen even close to the worst of that yet. Whereas inflation, we've already been dealing with that for a long time now, and with interest rates too. And of course, you just look at this chart here, credit card debt is well north of $1 trillion. And I just think consumers are really more worried about paying down their debt right now in that high interest rate environment than, buying some jewelry or some new TV from Amazon that, will only make their debt even worse. And that brings me to point number two here, that I don't even feel like I saw any crazy deals on Amazon during the Prime Day event where I was like, man, I gotta buy this immediately. It's such a great discount. I mean, I did buy some stuff. I'll be honest. I bought some vitamins. I bought a glass blender that I wanted. But even those things, first of all, I was going to buy those things regardless of the Prime Day event. And even for the Prime Day event, they weren't even on that big of a discount. Like the glass blender I bought, I think it was like 10% off. I mean, it was nothing crazy. And I would have probably waited for a 10% discount anyway, or I would have been looking for that anyway, regardless of Prime Day. My wife usually buys some stuff during Prime Day events. And I think she hasn't even bought anything this year. I don't recall seeing like a package arrive from her ordering something. So yeah, we really didn't buy much this year for the Prime Day event. But let me know if you guys found any crazy deals out there that you felt, you just kind of had to jump on. I'll be honest, I was tempted to pick up a Meta VR headset because I have been kind of eyeing those ever since they launched an Xbox version of that. But that one, I think, is not even sold on Amazon. I only see it on Best Buy. It's not on sale. And the ones that they do have, I was kind of tempted to get them, but ultimately I decided against it. It's not really anything that I need. And, I'd rather just have that money for investing and other stuff. For their part, though, Amazon did say that the drop in sales was due to really them extending the event from a typical 2 days up to 4 days, which likely caused consumers to hesitate buying early in case, some bigger deals would pop up later. But regardless, I wouldn't really be too worried about this either way. Amazon is incredibly dominant. People are going to keep shopping on there, even with tariffs and everything. I think they're going to still flood onto Amazon looking for cheaper prices wherever they can get them. And either way, the stock didn't even really move much on the news for the week, still finishing slightly in the green even, and still trading right near an all-time high. I would love to see Amazon stock fall though, so I could get it at cheaper prices. Next up though, Wedbush analyst Dan Ives called Palantir his top AI software stock, raising the price target up to $160. That's about $20 higher from where it trades today. And he was saying that Palantir is on a, quote, golden path to becoming the next oracle of the AI age, even calling it the Messi of AI, a reference to Argentinian soccer superstar Lionel Messi, given its sticky business among both commercial and government contracts, where they continue to see rising demand because of their ability to really solve so many problems using their leading AI technologies that in turn will benefit them from the trillions of dollars in AI spending over the coming years. And that was really his bullish point there. As AI spending just continues to soar, Palantir, he feels, will be one of the biggest beneficiaries, if not the biggest. And look, I'm obviously a big Palantir bull myself, and I've also made it one of my largest positions in my portfolio for similar reasons to Dan, as I agree that the business is very sticky. It's something that I've actually been arguing for many years now, or several years now, and you guys have seen that on this channel, given how weak the economy has been, especially, post-pandemic. I've been talking to you guys about how the fact that Palantir continues to be awarded giant contracts seemingly all the time and hired by so many companies, even with the economy as weak as it is, just really shows how much their services are needed, how much they help businesses run more efficiently, how much they help the government, and just how much demand there is for everything that Palantir can do. And although the valuation is very rich at the moment, I also agree with something that Dan has actually said in the past, that he believes Palantir will eventually grow into $1 trillion company by market cap. And that is, although he did say that it would happen in the next 2 to 3 years, whereas my time horizon would be more like the next 5 to 10 years. But I would love for him to be right about that too. Either way, though, the stock climbed another 6% this week on the positive upgrade. It's just always climbing at this point, and that helped balloon the market cap even higher, where it currently sits north of $335 billion. Let me know down below if any of you guys own Palantir stock, what you think of it. Speaking of Dan Ives, though, this is where things get a little interesting here. Palantir wasn't the only stock that he commented on this week, as he also tweeted out or X'd out. I don't know what the term is these days with being switched from Twitter to X. But anyway, he tweeted out some suggestions for Tesla and Elon Musk, which I'll jump into in just a second. But just so you have some context here about everything that's been going on with Tesla, it's been a wild ride lately. Elon has, of course, been going back and forth with President Trump, which only escalated the last week as he threatened to primary any Republicans that voted in favor for Trump's new spending bill, to which Trump then responded by suggesting that Musk may be getting more subsidies from the government than any other human in history, and that maybe Doge should investigate him. Well, this week continued that feud with Musk announcing that he will start his own new political party called the America Party, to which Trump then responded by saying that Musk has gone completely off the rails. Well, as you guys know from my previous videos, I've actually been locking in some profits on Tesla stock just because this whole situation, whether I agree or disagree with any of it, socially, politically, putting all of that aside, the whole situation has just become a bit too volatile and political, in my opinion, which is something that I never really like to see in a stock that I own, because it can potentially alienate part of your customer base, which in the case of Tesla is also happens to be occurring during a very challenging time for them, where they not only as a stock hold a very rich valuation, forward P ratio is like almost 1,000% higher than the sector, but they're also facing, a delivery growth slowdown that has even turned negative in some cases. And although I am still holding much of my position long term for their future potential and all the technologies that they have and all the impressive work they do, it's still something that I just felt like I need to be locking in some profits here, because it's very hard to predict how some of this stuff is going to play out. Either way, though, it looks like Dan Ives shares some of the same concerns that I have, which is alarming, because Dan has always been one of the biggest Tesla bulls out there. And I think he still holds like one of the highest, if not the highest, like price target on the stock. I think he holds one of the highest price targets on the stock. But despite that, he basically came out and said this week that Elon creating a new political party and delving even deeper into politics is, quote, exactly the opposite of what shareholders are basically asking for, as it causes distractions from the core business. And so he outlined like a 3-point plan for Tesla's board of directors to help them improve the company, which he posted on X, suggesting, number one, a new pay package getting Musk to 25% voting control so that it can clear a path for merging with XAI because of all the future potential that holds and how it can benefit Tesla. Number two, setting more guardrails for the amount of time that Musk spends directly with Tesla as part of the pay package. And number three, more oversight on Elon's political endeavors, to which Elon just simply replied to the post by saying, quote, "Shut up, Dan." Anyway, despite all of this drama, the stock actually finished well in the green for the week. It's a little deceptive because I think the week before it was actually higher. It dipped a little at the start of the week. But anyway, it later rebounded a lot during the week. It climbed a lot during the week. And that was likely thanks to the launch of Grok 4, which is not technically owned by Tesla, but it will be integrated into Tesla vehicles very soon, according to Elon Musk. Now, for those of you not aware, Grok 4 is the newest version of XAI's large language model that is trained on over 1.7 trillion parameters, which is 10 times more than the previous version, and it's been really leading like a lot of benchmarks against the competition, with Musk also claiming that it will only be a matter of time before the LLM starts to invent new technologies and discover new physics. And he said it can't do that now, but he thinks that eventually it will. As it applies to Tesla, though, again, the AI will actually be integrated into their vehicles as early as next week, according to Musk, where it will then be capable of analyzing real-time driving data, interpret dash cam footage, and even diagnose any problems and issues, along with, of course, doing all the other things that you'd want from an AI assistant, like giving directions, nearby recommendations, interacting with your smartphone, and all that type of stuff. To which some analysts are claiming now that this is really showing a sign of progress towards turning Tesla vehicles into fully intelligent vehicles. And it'll, of course, be a big component of their robotaxi future. All right, guys, we're running a little long here in the video, so I'm going to start going quicker through the rest of these headlines here. But we have Monster Energy, for example, actually fell over 6% this week after an analyst from Rothschild & Co. Downgraded the stock, pointing to uncertainty surrounding tariffs, more specifically aluminum tariffs that would make their costs rise because of all of Monster's canned beverages. Personally, I don't really understand, though, why anyone would even really want to invest in a singular type of company like this that is not only near an all-time high, but mostly just sells one type of product, which, to be fair, these are really some of the absolute most popular energy drinks in the world. But rather than owning this, I'd much rather have something like PepsiCo instead, who is much larger and, not only sells like energy and sports drinks, but also tons of other different types of beverages like juices and teas and hydration and waters and everything else, as well as even solid food snacks and other products too, being much more diversified with also a cheaper P ratio and especially a mouth-watering dividend that Monster doesn't even pay one. But let me know if you agree with me on that down below, or what your thoughts are. All right, speaking of singular companies that I'm not a very big fan of, though, Uber actually rose again this week to an all-time high after Bank of America rose their price target up to $115, citing new tax exemptions for driver tips in the new Trump bill that they estimate will save drivers collectively around $1 billion per year for a 2.5% pay bump, arguing that this may help improve driver demand and retention while also supporting Uber's take rate. As for me, though, I continue to be wrong about this stock, and I will just admit that. I've never really been a big fan of it because I'd much rather own something like Google, Tesla, or even Amazon, who all have exposure to the robotaxi future while still being, in my opinion, much safer, much more diversified into so many other technologies and markets too. But like I said, I keep getting this one wrong because the stock keeps climbing. Let me know if you own Uber, though, down below. Speaking of all-time highs, Nvidia is once again the most highly valued stock in the market, also setting a new record high, becoming the first ever public company to break a $4 trillion market cap. Absolutely wild. And this is coming, of course, after another 4% jump this week on all the continued hype and spending in the AI market, leaving it also up close to 1,500% in the past 5 years. Now, personally, I'm a very big fan of NVIDIA. It's one of my largest holdings, and I love everything that they do on both the hardware and software side of things, from AI and cloud computing to autonomous driving, the metaverse, crypto, even smart cities, and so much more. And although the stock is clearly extremely high right now and should probably be lower, like let's just get that out of the way, and just like the rest of the market, really, that continues to break record highs, I think we could use a healthy correction in the market. But, despite that, it is worth noting that analysts actually expect just so much growth and future potential still from NVIDIA that their price to earnings to growth ratio is actually very reasonable at only around 1.3, which is more than 30% cheaper than the rest of the sector, if you can believe it. I'm not saying that the stock is undervalued. Obviously, I can never make that claim, as, the company is the most expensive in the entire world by market cap, giant market cap. But I do think that it's worth holding on to very long term, and I can't really envision wanting to sell this stock anytime soon. But hey, that's just my opinion. Let me know what you guys think about this and all the other stuff that we discussed in this week's video. I hope you enjoyed it, my friends. I hope you're all doing well out there. Share with me anything you'd like down below. We can have some nice fun chats, but I will catch you in the next one. All right, take care, my friends. Bye-bye.